Multiple forecasts and studies are now out gauging the impact of the new tariffs on the U.S. economy. Most are not pretty, and Steve Liesman is here with the details of these.
It's interesting what happened,
details.
Andrew. The economists kind of skipped the idea of even valuing the new tariffs and went right to valuing the next round, because now that's the base case. The base case now is that they're going to have this 325, and we talked about this a month ago, that this idea of tariffs, get ready for it, it's going to stick around, guys. And so, guys, go right to the chart here, and I'll show you what, just a smattering of some of the, so Goldman says GDP will come down by 50 basis points. Nomura, a little less pessimistic, 30 basis points. Morgan Stanley sees a 25 basis point inflationary effect. And the New York Fed said all this will cost households through all the different methods. 4 different ways this happens, if I can remember what they are. Prices, confidence, what's the fourth one, the third one? Dead weight loss.
Energy department.
Dead weight loss, not the, right. And dead weight loss. I'll get to the other ones later, but here's some of the commentary that we've gotten on this. Goldman Sachs says the effects would be large because the experience with the initial 2018 tariff tranches showed quite sizable price effects. Nomura writes, there appear to be few readily available alternative sources for many of the consumer goods included in the new round of tariffs. We expect most of the impact on GDP growth to come from lower business investment. And so this is the most interesting one to me. New York Fed says importers are induced to shift to ever more expensive sources of supply as the tariffs rise. And we do not have an estimate as yet from the administration. It doesn't appear it has modeled any of the economic fallout. But so let me just talk about this dead weight loss idea. And this is from the New York Fed's paper. If you have a product that costs 100 and it goes to 125, and you look for another source for that product, you're going to end up somewhere below 125, but still above 100, yeah. Right? And by the way, the downside of the importer going to, or the producer going to another country, is we don't get the tariff revenue from that. Right. So if they go to Vietnam and they're going to 124, 123, whatever it is, $120, it's still $20 more expensive.
But it doesn't go into the U.S. coffers.
It doesn't go to U.S. coffers. Yeah. And the importer, the producer spent the time and the energy to find this other source, and that's part of the dead weight loss.
Steve, we talked about this the other day on halftime. Is it inflationary or is it deflationary?
Yes. Okay, here's the way, and we have an eminent economist who's going to answer this in just a second, but I'll tell you real quickly. Inflationary on the front end because prices go up, and that's just a fact. Potentially deflationary on the back end as a result of reduced economic growth. So that's some of the thinking around.